Hi everyone, welcome to today's podcast. My name is Marc Krombach. I'm joined today by Accorian CFO Craig Buick and Flagstone CEO Aidan McAvinue. Today we're going to dive in to see how Accorian Treasury Services, powered by Flagstone International, can make the most of our clients' capital. Let's dive straight in. So why don't we dive straight in, Aidan? Maybe for the benefit of viewers who are new to Flagstone, give us a rundown of what you do and how they can benefit our clients.
Well, the simplest level, it's one account in order to access over 160 deposit products and up to just short of 20 investment grade banks, all via one platform that we partner with Accorian.
And the kind of products that you're talking about, we're talking about bank style products, right?
Yeah, at the most basic level, anyone with an allocation to cash wants a safe haven, and they might be happy to lock that money in for longer for better yield, better return, better interest, or they might want access instantly, hence instant access and call accounts. And so just like you budget at home with your own money, we might be happy to lock it away for a bit longer. And what you get presented with on this platform is over 160 different choices across different banks. So whether you choose to place it with multiple banks, if you like the bank rating, the bank risk profile, could be an existing bank of yours, or if you want to lock the money in a bit longer and get a better return, those options are there as well, all presented via one interface.
You mentioned multiple banks, this diversification opportunity, you mentioned yield, you mentioned instant access. Craig, why is, from a finance leader's perspective, why is working capital yield and diversification so important to our clients?
It's an interesting question, and I think you've got to go back a few years in time to work out how the world has changed. So if you go back 5, 6, 7, 8 years, the world was in a zero rate economy. And so it didn't matter what you did with your cash or with your working capital. It sort of sat there and you can work hard, but it doesn't really yield you anything. And then a few years back, rates went through the roof. And everyone's starting to realize actually there's opportunity here. And most organizations sit on fairly significant amounts of working capital. And I would say a lot of companies probably don't actively manage that, and there's a real opportunity there. Rates aren't going to go back to zero. Rates, in my mind, are going to sit around the 2 to 3% mark, depending where you are in the world. So there's a real opportunity and a risk if you don't do anything about it. So I sit here with two hats on. As the CFO of Accorian, we are a client that needs services that Flagstone offers. We have 20 odd jurisdictions with multiple regulated entities. Our cash flows are complex. We are actively managing our working capital, and when we speak to our clients, they have the same challenges. And when I think about working capital, there's probably four things that I want as a CFO. One, I want the best possible return. I want to optimize my returns coming out of that. And that's where I could spend a bunch of time looking through the tables at the rates, but I've got better things to do. I'll find someone to help me do that. Second, I do need diversification. My board expects that. We've seen what happened with Silicon Valley Bank. I hope another one doesn't come along in the near future, but we need to be actively diversifying our risk exposure. Third, operationally, it's complex to manage some of these cash flows, particularly when you've got multiple banks in multiple jurisdictions. Everyone's asking, how do I simplify this? And fourth, I just need governance and oversight. My board, my shareholders expect me to actively manage this risk and optimize the return. So I need that governance and reporting. So working capital is something that's often neglected, but it's a huge opportunity for many organizations.
But as well, what's the common theme across anyone out there who's running a business, successful business, or an entrepreneur who's sold a business, or someone who's running a complex international structure, whatever it might be, there will be somebody sitting thinking exactly what you're thinking.
Okay.
And then they're facing the trade-off. And the trade-off is, if I want diversification, do I open multiple bank accounts? And then maintain multiple banking relationships? And then maintain multiple levels of reporting? And then maintain monitoring of each of those individual banks? Believe me, if your primary reason for being is to manage a business, manage a trading entity, manage growth, cash is your safe haven sort of working capital byproduct of this. It's not particularly exciting for some. And it really doesn't matter until it does. We've seen this with exactly what you've talked about, whether it's the financial crisis or otherwise. And so if we introduce an element, or partners with like Accorian on behalf of the clients, introduce convenience to those factors, simplicity, low friction, low cost. What we get to with your typical financial controller CFO is all of that through one interface. I've got my ratings for all the banks. I've got all the products available. I can easily ladder them and choose what I want. I can spread that working capital from instant access, they're available instantly, right through to longer term money without all that additional stress and account opening. So we really try and simplify this down to the administration cost, the friction, the risk, all those different factors get pushed away.
I'm going to go back to something you said at the outset and challenge you a little on that, Aidan, which was you said all the CFOs and financial controllers are thinking about this. I'm not sure that's the case. I think there is probably areas within the financial ecosystem where that's not being thought about. And I think that's the importance of the role of the CFO. It's asking the right questions.
Yeah, that's a good point.
And not every organization necessarily has someone around the table asking those questions. And interestingly, it's something that we at Accorian do, is we provide those CFO services into businesses where maybe they're junior, they're growing, happening rapidly. We can bring that expertise to the table. Just because we bring that expertise to the table, we can ask the right questions, but it doesn't necessarily mean we have the right answers. I've been doing this for 30 years as a CFO in financial services or similar roles. And I'm smart enough to know that I don't know all the answers. I know the right questions to ask, but I don't always have the answers. And that's where Flagstone really kicks in.
Well, it's why we partner with Accorian and some of your peers, because you have those relationships with your clients. You can provide them guidance on the availability, and actually, frankly, you've taken that first step of doing your due diligence, understanding that this is a viable solution, and because you've invested that time over some time now, and you've got precedent, and even as we know, Accorian use this for some of their own structures, right?
Correct.
So this is you put your money where your mouth is, right? And frankly, I would want to hear that if I was an underlying client or prospect of Accorian's or otherwise.
Correct, because I know enough to ask the right questions. I know that these treasury and cash management pieces, they are complex. So I hired a really good head of treasury. She's brilliant, but even she doesn't know everything. Hence, us reaching out to you and partnering so you can help us with our complex structures and optimizing our working capital.
I'll give you a good example, actually, Mark. We went along to speak to a single-family office I've known for some years recently, and they've significant sums. We're talking, in terms of allocation to cash, we'll be in the hundreds of millions.
Yep.
That's not why they exist. Just a trading conglomerate, complex business, but they have dedicated people to manage the bank relationships in order to achieve the diversification against a set risk ladder and behavioural ladder. They have a dedicated individual for governance, due diligence, and responding to the different banks. And it's probably about 8 different bank relationships. They then have the added friction of every time they decide to move a deposit from one bank to another for better yield, there are payments involved. And every one of those payments needs a callback because there are big numbers involved. Somebody has to set a timer on the maturity of that particular deposit, reassess the risk of the bank. There's a financial controller and head of Treasury who's monitoring these banks and combining conventional rating systems, so your S&Ps, etc., with credit default swaps. And so as we talked and unpacked, the net return they were getting on their dollars, for example, a penny was dropping, which was, how much is this actually costing us?
Yep.
And fundamentally, cash is not our core reason for being. And actually, if we add up all these different initiatives, or what could these people be doing if we just outsource this to this one platform? Because what they acknowledged was even finding and maintaining those relationships takes time.
Yep.
We don't have to do that because we do that. That's why we have all these investments. The primary differentiator is we have those global bank relationships and we maintain them. And because we have that collective buying power, the banks trust us and give us their better yield, their better rates. Right. So this is I think this is a phenomenal example of an element of disintermediation, but you have distribution for the banks. They like this because they get access to, from their perspective, liabilities. And from the CFO or client perspective, they get the convenience and efficiency of not having to maintain multiple bank account relationships. And somebody else is doing the hard work, which is us together.
And you mentioned a really important point for me, which is the fact that we're trying to do all this in-house. I think success for me is when you recognize what you are good at and acknowledge your weaknesses. People are often shy of acknowledging their own weaknesses. I think there's a real strength in that. People can't be a jack of all trades. And so I think recognizing what you are good at, many of our clients are excellent at finding investments, investing their money, underwriting new projects and doing the diligence on that. this cash management piece isn't something that's in their core. So why try and do that? To your point, when you fully load the costs of trying to do this in-house and the actual payback, it's a fairly easy mathematical equation when you stand back and look at
No,
it.
you're so right. But it has some strange knock-on effects, because even in this scenario, well, we have better rates with this bank than you do currently on your platform. Okay, well, what's your wider relationship? Oh, well, they get all of our investment portfolios, as well as our leverage, as well as our FX. Not surprised they've given you a premium on your instant access. So, but again, would you still give them all those other assets and opportunities, or, for that yield? Would you have that trade-off? And it is fundamentally a trade-off.
Okay.
Let's face it. Again, cash is that byproduct of other initiatives, other endeavours. And we all know we like to think we know what we should do about it. And just like in our personal budgeting, do we actually get around to it? We've brought that convenience together with
This is it. I mean, we're touching on access to funds. We're talking about the diversification. We even talked about risk management. Risk management is obviously key here. The items that you talked about that you provide, instead of having to do it in-house, that's quite an efficient part of being able to access the platform and providing that. I guess, Craig, for the risk management piece is obviously from your position key. I know that you yourself within the business use Flagstone. I know that you speak to clients who do that. The risk management piece, I think, is quite important. We constantly talk to clients who say we need to update our Treasury policy, and they do that because whilst they may have had relationships directly with banks in the past, they're now doing it through a platform which they need to get their heads around, and then they obviously realize that the risk is with the banks that they place monies with, which is an important part. I guess from your perspective, Craig, the clients that have used, I mean, you speak to the CFOs all the time. How have they benefited? Do you have some examples or scenarios?
Yeah, look, I think the risk appetite piece is really important. So when we're working with our clients, we're there to support them. So we'll work with them to understand their risk appetite. Once that is articulated, it passes off to us. It's up to us to manage it. And that's where Flagstone can really help us, because the reporting that you get, the understanding of the diversification, the concentration risk, the liquidity profiles. One of the key risk areas is, this is great, but if I need my cash, I need it tomorrow. That is critical. So it's an operational risk that everybody is very focused upon. And that's where this partnership, this offering actually works really nicely. We had one of our clients who was in the fund administration space came to us looking for answers to not just the risk management, but the commercial payback piece as well. And we had a great conversation about the trade-off between which is more important. Bottom line, both of them are. They put 13 structures through this partnership arrangement that we had. Within a year, that was up to 38. They could really see the benefit of it. And the feedback is, it's great that you're looking at this and I can see the output. So as the ultimate client, they can see the reporting to know that it's under control, but they can sort of forget about it because they know we've got it, because we know that Aidan and his team have got it at that point in time.
That's interesting. We obviously have a number of clients who utilize this. I know the client that you're talking about, Craig, the balance that they have across those 38 accounts is relatively significant. The money used to be with the mainstream bank, earning zero. I know that in 2025 they made over £1 million of interest accrual, which is obviously very important. And we'd like to think that that helps them mitigate some of the cost of running the structure, which I think is very useful.
And this is cash that would have just been sitting latent, as you say, in the bank accounts. They're investment professionals. They're great at doing deals. Who's thinking about what do we do to optimize the assets that they've got here in the latent opportunity? And that's really where Acorian helps them and Flagstone helps to deliver against that.
I guess thinking about the partnership that we mentioned earlier, from your perspective, Aidan, what is, we can hear what Flagstone has to offer, but why partner with Acorian? And then maybe into your side then, Craig, why is it important for us to partner? We've touched on it already, but maybe just summarize the benefits of both sides.
Yeah, I think it's a really good question. Why partner? I mean, from our perspective, strategically, working with an organisation of Acorian's scale is important, right, for the growth of our business. Your stature, I believe, 9,000 clients, 20-odd thousand structures spread across the globe. We're trying to build out a global scale business, and we've made very, very good progress. But for us, tactically and strategically, to work with the highest grade international partners is such a sensible way to go about this. Let's just think about it for a second. So we've got banks on the other side of this equation who are trusting us. And now that's fundamentally my product. I can't afford to break those relationships. And I know they will take significant comfort from the fact that we're working with firms of Accorian's caliber, because the nature of your client base and the way you'll go about engaging with your clients and the way you go about governing and undertaking your business gives significant comfort. I think the other piece, and something that really matters here actually, is when you're dealing with complex structures or international structures, and this has actually been a real standout piece for the Accorian Flagstone international relationship, has been when we partner together, we talk about solving for problems. I mean, 2 and 2 is 6, in the sense that we're able to analyze these problem statements. We're able to go to the next level of, hold on a second, the client's got these different currencies, perhaps we can find a better way of providing for a foreign exchange across those different currency pots. It might come down to longer term planning and actually engaging directly with underlying banks to get better returns for your underlying clients in terms of the planning. We have actually undertaken bid processes with some of the banks on your behalf together, because we could tell a story based on the nature of our partnership, representing people just like Craig sitting here to those underlying banks, and that's been really pretty compelling. And the last piece, which I think can't be underestimated, is, I've said earlier on, it sometimes doesn't matter until it matters. If your client's in a position where they need to, because of a transaction or otherwise, put some money to work in a safe haven, we've opened accounts in a matter of a day together, and that's pretty unheard of. Why can we do that? Because we've already got established, well-documented contractual relationships. We're peers in terms of our regulatory status, our ability to work together to get an outcome for our client, whether it's a new account which is instant on an existing structure, or whether it's a brand new account from scratch on behalf of one of your clients. We've got a few stories we've worked on together which have been, pretty much resolved same day and money in a bank the following day. That's pretty compelling in this market, and it's something we want to replicate as much as possible. I can't do that in the same way if I have a Craig running an international corporate or a gold mine or otherwise contacting me, because he's too busy. He doesn't really understand this market in the same way, nor has he really got the mindset to want to go and understand it. So actually, if he's talking to an Accorian and he's got good advisor in Accorian and he comes to me through that structure, I find it far more efficient, and he gets to focus on what he really wants to focus on.
And that's important, because it's back to the why are we as Accorian choosing a partner in Flagstone here. It's, as I say, I have a load of experience at running financial services businesses, but I'm not a treasury expert. I have 17 different things each day I could be or should be doing. Where do I add the most value as CFO for Accorian? It's in multiple places. I take comfort from the fact that I'm aware there's an opportunity, and I've got a partner like Flagstone working with me. We didn't start offering this to our clients until we tried it ourselves. I am just a carbon copy of what many of our clients are going through, and we tried it out from the onboarding side of things to the reporting, to the actual returns coming back. And when we saw what was possible here, I felt comfortable that I could talk to our client directors, they could speak to their clients and say, hand on heart, here's something that works. You are experts at what you do. You're not experts at everything. Go find some expertise, and we have that expertise. We will have the relationships with these clients. Let us partner together on this.
Yeah, it's interesting. We talk about banks and clients having a relationship with banks and obviously wanting the products that aren't necessarily available. What we're doing is extending a range of products, banking products. When we think about our client directors, our client managers, administration, and the clients themselves going to open a new bank account with a standard bank, mainstream bank, we're measuring that onboarding process in months, not even weeks. You just mentioned a day or so. Maybe just talk us through the onboarding process from Flagstone and why you're able to deliver that in such a short space of time.
I mean, let's start with, and it's a great question, right? Let's start with the fact that this is not easy, right? If you're opening a conventional consumer account with an online banking platform or otherwise, we've seen incredible leaps in efficiency. As soon as you're dealing with international structures, complex structures that for all the right reasons may touch multiple jurisdictions, when you overlay the quite rightly the regulations that are there to protect everyone for the potential for money laundering or otherwise, and you just look at the wider world, we can see why this stuff is so important. This is complicated, and it would not be unusual. I've got massive sympathy actually for a lot of the banks when they're doing account opening. I've done it myself over my career, and frankly, you can't afford to get it wrong. So there's a reason why it's complicated. There's a reason why it can take months. And I think what we always must avoid is comparing that simplistic onboarding with ABC online bank when you're a conventional consumer in a single currency market and everything's available on registers versus international onboarding. So caveat would be, I'm not surprised it takes months sometimes because you can't afford to get it wrong. What makes a difference is when you're working together with someone who already has that client relationship, for example, Accorian, has already undertaken all of that due diligence. Now, we are not in a position to say, I'll just rely on you doing this. What we do is we collaborate. So what we do is we think, the client's going to, this is a complicated scenario, the client's going to have to navigate it. Let's us do the hard yards. Let's us work together to make sure that none of that pain touches them until absolutely necessary. And that's what makes the difference. And, you know, typically we would look for 5 days, depending on the structure for account opening, to make sure we follow the right steps. But again, back to the benefit of big partnerships. When it comes to prioritization of resource, when it comes to the confidence to trust in what's been provided to you, to have a cadence that we've built together and how we go about these things is what makes all the difference. And so it is always going to be complicated. And frankly, as we see more and more disruption in the industry with technology, etc., more and more potential fraud, we all have to be so careful. I think we'll just keep adapting together to maintain that advantage for the clients. And, you know, we've been exploring things together, haven't we? But where we can, you know, proactively issue account numbers and onboard even faster together. So it's not just about technology, it's about the combined intellect of our businesses.
And I think the partnership of Accorian and Flagstone, I think we've developed a good relationship over the last 2 or so years. And we are starting to get to know each other, and actually it's a testament to the team working together to be able to deliver the documentation. You have a team in the background working hard to review, understand, ask questions, we respond, and I've yet to see an account take longer than 5 days just to confirm your claims. And I think it's been a really exciting piece for us because, as I mentioned, the lengthy onboarding from other banks has been a pain point.
Yeah, and I mean, if we imagine you got to a position where if you were only holding relationships for the purpose of holding that asset class of cash, and you were trying to maintain those multiples, and organizations like Accorian will have hundreds of bank relationships. It is always worth looking at that whole suite and think which ones are just cash holding. Let's revise that and make that whole experience a little bit better. Because when we add up that full cycle of it, let's face it, this is not just about onboarding, opening an account. There is then the ongoing life cycle of account maintenance, which comes down to obligations to review on a periodic basis, reconfirm that people's passports haven't been out of date, reconfirm no changes or introductions of any new risk to the structure. There is a significant overhead. And let's be clear, if I was a bank as well, and this is quite fundamental, you know, banks, you know, there's a reason why these banks are engaging with us, because fundamentally they need to generate these liabilities as efficiently as possible. And traditional distribution will go through layers and layers of relationship management, etc. And quite rightly, and banks are, you know, fundamental to our ecosystem. But when it comes to straightforward raising liabilities, you want that to be as efficient as possible, and that's what we do for them. Importantly, they don't want a consequence of that efficiency being a trade-off with risk profile. And again, we answer for that as well because of our structure together.
Well, we've covered a lot of ground here today, and hopefully you'll see how a partnership can really benefit our clients. Special thank you to Craig and to Aidan for coming in today, and to you for tuning in.